The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the March 26th magical Monday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. And of course, the easiest way to do that, it's to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we get to go check out the circumstance of these markets. We get to go figure out what the bulls and the bears, what the buyers and the sellers are communicating to you and I just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here, but more importantly, I'm here to serve you. So feel free to pick up that phone, dial on in, 877-927-6648. If you can't dial in, no problem. You can always let your fingers do the walking. You can send me an email, steve@tfnn.com. Inside that subject heading, please put radio show question, of course, inside the Tiger's Den. Well, any ping will do. So let's go ahead and get this show started on magical and magnificent Monday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, the Dow up 446 points. That's nearly 2% to the upside. S&P up 1.5%. That's 39 points. NASDAQ 100 up nearly 2%, keeping pace with the Dow. That's up 121 points. Russell 2000, a bit of a laggard, only 0.6 to the upside. That's 9.5 points. Semis are up. They're the leader, up 2.25%. That's nearly 30 buckaroonies. 1353 is what she's trading out at. Transports are up 1%. Wilshire 5,000 up 1.3%. Some of the spot volatility index is down nearly 10%, 9.5% out there. You'll want to watch to see if that gets to a minus 10% or below minus 10%. If it does, that could be an initiation move. Typically marks an initiation move in price in the S&P 500 to the upside. So that's going to be one thing. You want to write that down on a pad of paper that you're going to want to watch at the end of today's trading session. If you got gold up $4, that's trading out at $13.54. Silver up 11 cents, trading out at $16.70. Light sweet crude back 40 pennies. 65.48 is the number. Leading the charge dollar-wise, the upside. Nothing amazing here. It is Amazon up $28. Booking Holdings up $16. BlackRock up 12. Netflix is up 9. Adobe is up about 9. Northrop Grumman up about 9. To the downside, it is Long Financial Corp. Oh, yeah. Down $13, 19%. Ouch. Protagonist, PTGX, having a bad day, down 57% or $11. Shopify down 5%. Tesla is up 2% or $6. So there's things to look at to the downside, certainly things to look at to the upside. First question posted by Ruby inside our Tiger's Den. Ruby says, Steve, do you see weakness on the small caps as a sign for lower price on the other indices? So great question out there. Let's go take a look at the Russell 2000. Here is the daily time frame chart out here. And what Ruby is really referring to is that it is not up like a full percent or 2% like the S&P, like the Dow, like the NDX 100. And so it bodes well as far as a question out here. Is it weakness? Is it a sign of things to come, right? I don't know. I wish I could answer that question. I don't consider this to necessarily be too weak per se, and the per se goes back to the fact that we're just really still trading in and around the March 1st swing point out here, March 1st and March 2nd. Hasn't broken through those levels. You know, if we take a look at the Dow by, let me see here, INDU, we're going to see that as far as March 2nd is concerned, it blew through that swing point out there, Ruby. So whereas I understand the question, I would say that the Russell is a stronger looking chart to me because it hasn't taken a swing point than, as an example, the Dow. Or as an example, the NYSE. I believe that has taken out a swing point by getting all the way back in that February 9th level out here. So I don't see the small caps as being weak. Today, if we wanted to go ahead and just focus in on today, you're absolutely right. Weaker than the other indices. But with regard to maybe having and maybe they had lower. Maybe today is nothing more than a test and rejection of a swing point, which would be March 1st. Because you see, Ruby, we've done 13, not we, but the traders out there have done 13 million shares today. And they're testing a swing point March 1st with 38 million shares, 39 million shares. Can't control what happens between now and then. But if the IWM were to close above 151.57, you're trading at 150.90 right now. But if you were to close above that, that would be a failure on both price and volume at that swing point. If it closes inside the swing, below 151.57, you know, all it does is say, hey, maybe it goes down and tests the low, 148.38, but it's not doing it with any kind of accelerating volume. Another way somebody might look at this and say, well, this is really trading higher from Friday, and so it's a light volume move to the upside. That's another way that you can take a look at it as well. If we look at the weekly time frame chart, maybe that releases a piece of information to us. I don't know. But let's go take a look at it. What was the IWM doing last week? 160 million going into 256 million. There is only one way you can interpret that. Well, you can interpret it as many ways you want. The way Stevie would interpret that is the Russell 2000 is pulling back with light volume. So I would say, something to think about. Maybe the IWM is telling us something, such as the market wants to move higher instead of lower. So I hope that helps you out. And that was question numero uno. I don't see any other questions on deck here in the, no, I don't see anything in the email category. So let's continue just looking at these markets and try to figure out, in addition to the spot volatility index, potential one-day rate of change, somewhere below minus 10% out there, what else would we be looking for? That's a great question. I'm glad that you asked that. I would say let's keep an eye on, well, let's go back to the ES Mini out here, because the spot volatility index, more associated with, in fact, only associated with the S&P 500 out here. So let's go take a look at what's going on inside the ES Mini. And as we take a look at it, you're going to see that as we speak right now, we have potentially a piercing candle. What's a piercing candle? It says that it's piercing into the body, at least halfway into the body of the prior candle. A piercing candle on a scale of 1 to 5, with there being five double candles, double candlesticks that you want to pay attention to. From a strength standpoint, it's like 2 out of 5. Still an important 2 out of 5. It gives you a bullish reversal signal when inside the ES Mini, it on a daily basis has been pushing lower with less relative energy. Should today finish out with some type of bullish reversal signal, could be a piercing candle, could be a bullish engulfing for all we know, could be nada. But if it's one of those bullish candles, it says you can expect, you can anticipate the ES Mini to trade up to the 2696 area. Steve Rhodes with TFNN. We'll be right back. You don't buy into that nonsense, do you? You know you can't time the markets. I didn't. And in 2006, I set out on a mission to do just that. I began by surrounding myself with the greats like Tom O'Brien, Larry Pesavento, David White, and Basil Chapman. I read countless books and even looked to the moon and planets for answers. Now, we both know that trading is 80% mental. So I learned the exact tools that Tony Robbins uses to overcome fear. I'm Steve Rhodes, author of Mastering Probability. And last March, the folks at Timers Digest began tracking my newsletter signals, which through January 18, 2018, placed me as the #1 gold timer for that exact time frame. Now, I can't officially be recognized until Timers Digest has a full year of signals, but clearly I've learned how to time the markets, and I'd like to teach you how to do that as well. Subscribers to Mastering Probability gain access to my live and archive workshops where I show you the exact same patterns that earned me this #1 ranking. If you're looking for great market calls and an education, sign up for Mastering Probability today at TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. So our next question also comes from the Tigers Den out here, and it was with regard to the last chart that I had posted. That was the daily chart for the ES Mini. So that's what has been reposted here right now. And the question is this: does the red line, that's Stevie's red line, that's also referred to as the oscillator unchanged line. So does that oscillator unchanged line, when way above the market, like it currently is inside the ES Mini for the June contract, does it often act as a rally target? And is it often achieved out here? And so the answer to that would be, if you get a bottoming signal inside the market, in this case here in the daily time frame, if you get a bullish reversal signal, the answer would be yes. Either a bottom has formed because you had price moving lower, doing less relative energy out there, and that would say, okay, I'm going to go ahead and attempt to take on resistance. And resistance is really going to be Stevie's red line. That's going to be your first level of resistance. Now, that number is going to change as price moves, as time moves out here. But right now, the general vicinity of 2696, 2700, 2695, somewhere around there. So, yes. But what you and I then must do, it'd be incumbent upon ourselves to go take a look at what's going on the shorter-term time frames to help us really answer that question out here. And to do that, we take a look at a couple different shorter-term time frames. First, what we can do is go take a look at all market profiles, see if there's any piece of information that is being revealed to us. And the answer is, now this has got a 60-minute, that's the left-hand side panel, then 120-minute, then 240 daily and weekly. We have no profiles, no new profiles on the daily or weekly to assist us. What we do have is a profile that began forming on Friday, March 23rd, about 10 o'clock in the morning. Bearish structured profile is what I should say. And price obviously closed below the low of that at 26.38. This morning, during the 6 to 10 time frame out here, we had price test the bottom of that box, 26.38. So here's what we also know. That has acted as resistance. If the ES Mini closes above 26.38, this gives us a price projection, either the center line of that profile, as long as the profile remains. I don't know what it's going to, if this profile will be with us 6, 10, 20 hours from now or not. But at this stage, what we know is this would give us a target in the 26.91, 27.01. Well, you had 26.96 on Stevie's red line. So, yeah, this would then give us a double confirmation of where price would be headed to or should be headed to. And that's that out here. Now, how are we going to know if that's also going to occur? Well, a couple of different things. One, we would also look at market breadth. And I have two different time frames. I've got a 30-minute and a 60-minute. We're going to take a look at the 60-minute market breadth for the ES Mini, which as of 9 o'clock, as of 9 o'clock this morning, on a 60-minute time frame, we had a bullish crossover. The green line going over the red line, meaning more issues inside the S&P 500 trading above the top of the 60-minute profile versus those tracing below the bottom of the 60-minute profile. As we speak right now, 246 of the 500, nearly 50%, 49.1 to be exact, and 28.9% below, 145. So that's pretty strong market breadth on a 60-minute time frame. Do we have that type of bullish crossover on the 4-hour time frame, the 240-minute time frame? No, we do not. So as long as you didn't see a positive crossover here, says that's a real resistance area. As price, that was at 2691-ish, 2701-ish area out there. So so back to the 60-minute time frame. I would just simply come back here and take a look at a 60-minute chart. On a 60-minute chart, what we can see out here is that the retracement that took place into the 12 noon time frame may have actually set up the C point of an A to B equals CD to the upside. It would look like this, which may just be a Gartley sell pattern. I don't know whether it's a Gartley sell pattern or it's the beginning of the beginning of a bottom that is out here. But this too would give us a price projection of about 26.55, 26.70. Here comes the 70 again. So if you were to see price close over its highs, very similar to what we looked at on the 240-minute chart in that 26.38, then you'd have another confirmation of a move higher. And if you're looking to sell the market, you would be looking at one of those Gartley sell areas on the 60-minute time frame. So what are we going to conclude right now? We're going to conclude the following. It's 1:23 in the afternoon. You have positive market breadth on a 60-minute time frame. By the way, you also have positive market breadth on a 30-minute time frame. Therefore, if we see the ES Mini close above 26.38 today, we were going to anticipate that there's further upside, or it may have just been a bottom. And we'd really go back and take a look at that daily time frame chart, see what kind of candle formed out there. And then, yes, you would anticipate that price would bounce up towards Stevie's red line. So I hope that that answers that question thoroughly, because that is the only way to do it. SR, you're moving quite fast with all your confirmations. But you mean I'm speaking too fast out there? Moving too fast? And I'm not sure how to interpret that. But that's how I read things. What happens if that doesn't happen? Hey, right now what we know is 26.38, 26.39 is significant resistance. It has held thus far. Herein lies the fight between the bulls and the bears. And that means, well, why don't we go look elsewhere? Part of that elsewhere out there is really watching that spot volatility index. But we can also go take a look at another indice, another equity futures contract. Let's take a look at the NQ, because we can do, in essence, the same type of work out here. And as we look at the NQ, its resistance area is 66.84. That has been resistance. We're at 66.65 right now. If you see price close over that, this tells me the NQ wants to go ahead and bounce up into the 68.35 level. If we take a look at what's the NQ doing from a market breadth standpoint, we'll come back to the 60-minute chart, just like we looked at in the ES. And from a 60-minute perspective, it was at 8 o'clock this morning when we saw it turn positive out here. So on a shorter-term time frame, there's nearly 59 to be exact, 54% of the constituents. You know how we like to use that word, constituents, 54%, 59 of them are trading above the top of their 60-minute box and 27 below the bottom. So right now, it's short term. The bulls are in control. Now, you didn't need me to tell you that. What you needed me to share with you is where are the resistance areas and what is it that we pay attention to see where price might head to. And inside the NQ, we've got 68.35 to 68.49, the top of that daily profile is well out there. So that's what I am looking at. If we look for any kind of other signals out here, to the upside, to the downside, it is still the bears that are in control inside the NASDAQ composite, that is, as we speak, but just barely. So if that starts to move higher and market breadth starts to increase, that would actually be bullish out here. New York Stock Exchange certainly bearish. Dow is still bearish, even with today's move from an advanced decline oscillator reading. And you do have the spot volatility next where it should be, back below the top of that Bollinger Band. And that says what's in play is 1782. You're trading at 2239. Steve Rhodes with TFNN. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Let's check in on the email line. Not a darn thing out there. Oh, did I? No, I didn't. I almost thought I deleted that chart. Did not want to delete that chart. So let's go take a look at some other instruments out here and try to figure out if we can gauge what they're doing. Let's start by let's go look at gold. Let's go take a look at Goldilocks, see what we know here about gold. Trade out at 1354, above the high from last Friday out here. You would say that it's trading inside the swing point from January 25th. January 25th, that swing point high out here. Let's go grab that number. Give me a moment. We'll just use a yellow horizontal line out here. That would give us a price target area. 1370. 50 would be a price point. Just take a look at swing points, 1364.40. That's looking at the daily contract out here. So that's where we would target. If you go back just a tad further to the highs out here in September, that's right at 1370, even Steven out here. So it looks like that is where gold is headed to. That's when we take a look at the daily time frame charts. Let's go take a look at this set of charts out here inside of gold, see what we know. We know it was inside a descending price channel, broke through that with conviction on Friday, so that bodes well for it. I'm just going to go ahead and get rid of that line out here. You've got a rising price oscillator above zero. That's as long as price stays above Stevie's red line at 1330.40. All bodes well. So that, too, looks good. Let's go take a look at its market profiles out there, see what we have here. And here is gold. You're above the 60. You're above the 240. You're above the little descending trend line, just barely. But if you take a look at the high from January 25th, and then you use your next touch point, the high from February 16th, you're going to see, and you use that as a trend line, that price, in essence, is trading right on that trend line right now. So closing above, we'll call it 1356, would then say, all right, you might as well go test out really 1357. Isn't that the number, Steve Areno? It is, because at 1357.70, that's, oh, didn't mean to do that. I meant to do this. This is where we have the weekly top of its box. So it looks like that's already been hit. Well, not exactly, but 1357.70. So the number is 1357.70. If you see gold close above that, that is bullish in dollar terms out there, right? In dollar terms. Well, that leaves us with at least one more thing that you and I need to go look at, and that is gold priced in euros out here. So we do have, in essence, gold priced in dollars breaking above a trend line, a downtrend line on a daily chart out here. We don't have gold priced in euros doing the same thing. In fact, it's pulled back just a little. And the key to us, those that are long gold or the miners out there, is we really want to see gold in euro terms close above 1107.70. We're not there yet. That's going to require another 88.98, another about $19. Yeah, in euro terms out there. So things are looking good. There's just a little bit of work that needs to be done. If we see gold close above 1107.70 in euros, that is going to be nice and bullish, because we want to see, in essence, gold run higher in all major currencies. But right now, we'll take the euro as the currency that we want to draft behind out here. What happens if that doesn't get taken out? Then we're in this like sideways trading range, continue to be in a sideways trading range inside of Goldilocks. Can we make a call right now? We really can't. We can't. We just simply can't. So let's go to New York and speak with Maria. Maria, thanks for calling. Thanks for holding. How are you today?
I'm good. How are you, Steve?
I'm very well. Nice to hear your voice, and thanks for calling. And how can I help?
I'm sorry, I missed. I was not able to call you when you were covering the ES Mini, so I'm sorry to make you repeat something.
That's okay.
If you covered it, but you know, on your letter, your first chart was describing the ES Mini. What is it, 30 minutes?
240 minute chart.
30, 40 minutes. And you were saying something which I couldn't understand, because by 7:30 in the morning, we had already, the ES mini was up like 35 points or 30 points already. And you said at 7 a.m., we don't have a bullish reversal candle that we need to, so we can't take a bullish sight on it, or bullish bet on it. And I couldn't understand why, because by then we were above your red line. We had like a succession of 3 or 4 240 minutes candle green. So I just want to, just want to understand what made you wait a bit for pulling the trigger.
Sure. So here's my experience, and what I'm going to do is I'm going to get a little bit of a cleaner chart versus the one that I have on my screen right now. So just bear with me. But as I'm doing that, as I'm multitasking here, when I developed this pattern, when I began searching for the reason why certain patterns failed, not why they succeeded, but why certain patterns failed, what it led me to, so for example, and that was with the A to B equals CD pattern. And when I was trying to buy or sell the one-to-one extension there, and it worked sometimes and it didn't work other times, I wanted to understand why. Why was it not working? What was I overlooking? And what I found was, and then when I developed this price relative strength divergent pattern out here, what I found was is that the key that gave you a higher degree of probability that the trade or that the signal was correct was a bullish or bearish reversal candle. So right now what I'm going to do is I'm going to go ahead and pull that 240-minute chart up on the screen, even though we've got it here right now, just a little bit of a cleaner signal. And what I want to do is I want to go back to past patterns that are out here, which I had some arrows pointed for you this morning. And if we take a look at, and these gave great signals. So I'm going to first start with back here at about 10 o'clock in the morning, and this takes us back to March the 2nd. March 2nd, a key level, when also on March 2nd, everybody believed that the markets were going to careen lower. And it just so happens on a 4-hour chart, price was moving lower, doing less relative energy, and that very next candle session at 2 o'clock in the afternoon was that bullish reversal signal. That was a signal to you and I that the cavalry was really there, that bullish reversal signal, just like up at the most recent high out here, and this is at 10 o'clock in the morning, and this is on March the 13th, price was moving higher, doing less relative energy, and on the 240-minute or 4-hour time frame chart, you receive that bearish engulfing candle. And it's really key to get that reversal signal. So then price starts moving lower. It starts doing it with less relative energy. And when you see these black diagonal lines that form on the charts inside the newsletter, such as the one that was at 6 o'clock in the morning, and this was on March 22nd, that alone was not a signal to go long. Can you wait through this break, and we'll come back and we'll complete this, and I'll answer every single question that you have.
Thank you very much.
This is Steve Rhodes with TFNN. Maria and I will be back after this short break.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foresight Fund Services, LLC. The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com. No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Thanks for coming back, folks. So we're on the line with Maria in New York, and she's asking a very specific question about the first chart that was inside my newsletter. Now, the reason she's asking about that is last Friday, as the markets were moving lower, inside the newsletter, I had identified this 240-minute chart for the ES Mini, and what I said was we were going to go ahead and remain short with regard to our market posture until this next price relative strength divergence formed, if it did, which it did begin forming again last night as the market opened, right at about 10 p.m. was when we see this black diagonal line moving lower. Now, the mere fact that price either moves higher or lower with less relative energy, Maria, that alone is not a signal to go ahead and take the counter trend move up the direction that it's moving in. You really want to wait till you get some type of bullish reversal signal. For example, there was a move at 2 o'clock in the afternoon on Friday where the ES Mini had bounced from a low of about 26.64 up to about 26.96, which was a nice move, a 30-point move out there. But it simply failed. And that price move, well, as you pointed in this case here, was below Stevie's red line, but not a bullish reversal signal, and therefore no reason to take that trade. In this morning's newsletter, at 7 o'clock, we did have price trading above Stevie's red line out there, as it's shown out here in the chart. But what we were also doing is you've got this wide-ranging bar, you know, that went all the way into the close of the contract out here. And whenever you're just trading with inside this wide-ranging bar, and there is no bullish reversal candle out here. So technically, with regard to the 240-minute time frame, we do not have the signal that I was requiring on Friday. Do we have a bounce?
Okay, so,
absolutely.
Okay, no, I think I understand what you meant. So basically, what it meant that basically, if this morning at 7 o'clock in the morning or 7:30, you have seen a green candle going all the way back to 26.45, that would have said to you, okay, I have the proof that it's a bullish reversal because my candle is bigger and going above the previous high, or whatever, 26.46, right? Is it right? Is it like that you say that you have a proof of a bullish reversal? Is because the candle you're studying is bigger or higher than the previous day's high?
Not exactly. Not exactly.
No.
And what that would not have generated for you and I would have been a actual bullish reversal candle. A bullish reversal candle would be like a bullish engulfing, a bull sash, a hammer candle, a three-river evening star, and it would not have given us that. So instead, what I did this morning, I was looking, okay, what's going on at 6 o'clock? What's going on at 7 o'clock? What's going on at 7:30? And by 7:30, what I also noticed was two things out here. And what occurred was on the daily chart, what we looked at was that it was also moving lower with less relative energy, and it had begun to generate a bullish reversal signal. Right now, it's a piercing candle. That's what it was this morning out here. And if that does provide you and I with a bullish reversal signal, then that says, aha, we may have the bullish reversal signal to indicate to us that using this trading strategy, a bottom is in. Our preference.
Okay, so you have to look at every single candle and just see if it performs one of those bullish patterns, right? Otherwise, you will say, even if I have a green candle, even if I have less intensity on the drop, so less sellers, even if I'm above my red line on a specific time frame, that will not be enough for me. I need to have all those things lined up like little ducks, right?
Yeah, that is correct. For this specific pattern. For this specific, for two patterns, I'll give you two patterns. One is price moving higher or lower, less relative energy. The second pattern would be the A to B equals CD pattern. And so, and that is present right now inside the ES Mini on a 240-minute chart. I'll draw that in, and we can see that the 1 to 1.272 objective was hit late last night. But it, too, needs an actual bullish reversal candle to confirm, to say, okay, you now have the signal on this time frame to buy the D point, so to speak. We don't have that. So this morning, what I needed to do for us was to qualify it and say, okay, here's the conditions at which at 12 or 12:30 when I send out an update, if this is taking place, we will go ahead and begin a long position in the market. That didn't occur. And that was also taking a look to see where was price trading in relationship to 26.38, 26.39, the bottom of those profiles for the 120-minute and 240-minute. We knew that those were likely resistance levels, and they've actually worked out to be resistance levels, which was why I was able to ask Z, or answer Z inside the den and say, you know what, if price closes over 26.39, even if I don't have the bullish reversal signal on the 240-minute chart, we now have enough information to suggest there's more counter trend rally in place out here. But Maria, what will override the 240-minute chart becomes the daily time frame. Any larger time frame that gives us a same kind of pattern, but gives us the bullish reversal signal is going to give us more weight, more meaning. Is that kind of making sense?
What I'm learning so much. Thank you so much, Steve, because I've been trying to learn, because as you say, you've been providing us at TFNN with so much information in terms of your experience and everything, and you've been working for this since 2006. You were saying,
yes.
So I'm trying to absorb what you've been learning and testing and everything. So thank you very much for spending your time. And I'm sorry for the other callers who probably want to have more questions, but I'm glad
actually
that
no.
something.
Actually, what occurs, Maria, is you actually end up asking the questions that others would like to ask. So the other callers are just listening in because they would have the same type of questions, that you have.
I don't know.
They do.
But thank you very much.
So, yeah, my pleasure. Thanks so much for calling. So that was Maria in New York, and she was really asking questions on behalf of everybody out there. And that's really, that's really for each of us out here. That's what it's all about. It's a matter of you've got 45 people or so inside the Tiger's Den right now. So what is that, 90 eyes looking at charts or looking at trying to provide each other with more information out here. These are patterns that we discuss or repeat all the time here at TFNN. The one thing that I learned, or at least, and I'll put, this is a chart for the Dow, and what I will do is I will select every single possible bullish or bearish candle and put it on the chart right now. So now it's completely decorated. So it's kind of like too much out here. But price is going to continue moving higher. This much I can guarantee you, higher or lower. Price is going to continue moving higher until you see, as I like to say, the cavalry arrive. the very first thing you need to see is some type of bearish reversal signal to suggest that possibly price is going to do something other than go in the direction that it came from out here. If you take a look at the top as an example, now, just that alone is not a trading strategy. And how do I know that? Because I've tested those trading strategies to just, for example, I just tried the hammer and the shooting star candle. As soon as you got those, you automatically went long. No, you had to have some way to exit a transaction or a trade out there, but it just didn't work. Those reversal candles, where they have meaning, this is, of course, my experience, is at the completion of a pattern. But hey, January 29th, that was kind of the first bearish candle we had seen in several weeks. That was a bearish sash. That was the high thus far. Steve Rhodes with TFNN. We'll be right back.
Would you like exposure to the foreign currency markets without any downside risk to your principal? Then consider the Petro Currencies Market Safe CD from Everbank. This 3-year U.S. dollar-denominated CD leverages the performance of 4 equally weighted currencies from these top oil-producing countries: Brazil, Canada, Mexico, and Russia. This CD features a 200% leverage factor, which means that your potential upside payment will be double the currency's average performance at maturity with no cap if the currencies increase in value over the CD's term. And if the returns are negative, your principal's 100% protected. Returns are based on CD performance with no correlation to the price of oil, and there is no annual percentage yield or periodic rate of interest on this index CD. The April 19th funding deadline will be here before you know it. So call 1-855-750-4051 or visit everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. This advertisement is sponsored content. Everbank is a division of TIAA FSB, member FDIC. Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Thinkorswim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's TigerTV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors.
This is David White. Stay tuned because coming up next is the Power Trading Hour right here on TFNN.
Welcome back. So we got the 2-minute countdown. There was one more question that was posted inside the Tigers Den. It really kind of all ties into Maria's question, just simply my journey down technical analysis lane, so to speak. My secret sauce, if we want to call it that. My secret sauce, the discovery that I made out here, well, there are several of them. One is with regard to this question here. The question was with regard to what exact percentage of time does trading off a pair G work? Please do share any quantitative data. And this is from P inside the Tigers Den. P, I discovered this pattern many, many years ago. after spending a lot of dollars getting a complete digital ephemeris, then spending a lot of dollars getting a programmer so that I could take that ephemeris and post it on every single day, whatever it is I wanted to track. Retrograde, direct, anything. Full moons, new moons, you name it out here. And what I discovered inside the ES Mini, because that's my bailiwick for trading out here, was that none of those things gave me consistent results, with one exception. The exact price point when the moon was either furthest away from Earth during a cycle or closest to Earth. Apogee and perigee. And I did a ton of work. Have I maintained those statistics? No. If there was one thing, and I've discovered many of them, if there was one thing that should go down as one of the greatest discoveries from a technical standpoint, maybe one if I wasn't so giving that I would just go ahead and keep, it would be that one. I say, you can use the stuff that we share here, or don't use it. You know, it's whatever your cup of tea is out there. But for me, it's perhaps one of the most invaluable tools that are out there. The same thing holds true with the pattern that Marie and I were just looking at. I discovered that pattern when I was trying to find something that gave me a consistent signal at every bear market top out there, and it was no celestial pattern. It was what Maria and I were just talking about. But the key is you've got to know your P's and Q's. That means your bullish and bearish reversal candles out there. So, folks, stay tuned and go down memory lane with your favorite polar bear in mind, David White. He's up next. I'll see you back tomorrow at 1 o'clock. Have a magnificent Monday. Take care.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.